Hello, everyone. Thanks for joining us for Top Trades Tuesday. We are excited to have our special guests on today from the New Money crew. Nate Tucci and Graham Lindman are here to share more of what are some of the trades they are watching this week and really just in general, some of the major market moves happening. Guys, I know we've been talking for the last few weeks about a September slowdown and the potential of that, and it seems to be off with a bang right now. This heat map not looking so good today.
Yeah, I got to give Graham a lot of credit because he's been talking about the September slowdown for a little while now. In our most recent session last week, he kind of pointed out, seasonally and the fact that we're overextended and we never really got that couple percent correction that we thought we might get in August has not occurred yet. So beginning of September, kind of an ideal time. And well, beginning of September, here we are, and a pretty quick start to the pullback. So he's been on it. I to be perfectly honest, was a little more hesitant. I kind of wanted to see it actually show up in the charts before I was ready for a big, ugly red day, but we got it. So, Graham's been on the ball there, and looks like, as you're showing, gold really the only thing that's kind of defined the trend right now.
Yeah, let's talk about, before we get into some of the major trades and kind of the implications of this September pullback, let's talk about what we're seeing in that heat map today. What are some of the biggest losers, and what does this mean for traders today to see so much red in that heat map today?
I think you'll probably start from the top down of the stocks that have been the most bullish, the best stocks, maybe the more speculative names, if you will, like NVIDIA, Google, Amazon, GEV, which is a stock I own a ton of. It's an energy nuclear name. It's been a rocket, and it's down 6% today. So I think it's very typical on a hard selling day like today. You see some of what we would call the best stocks down the most. Again, we kind of expected it. We're not freaked out by it. If anything, it hopefully will set up a great opportunity to buy some of these stocks that are hurting today at a discount.
Yeah, and then on the other side of the coin, healthcare, which has been really weak during most of the run-up, actually moving the other direction. So like Graham said, you're kind of seeing that flip right now happen.
Yeah, that was one of the questions we had right away was what sectors are safe right now? I also always want to know the why. So I think let's cover those two things quick before we move into some specific trades here. Let's talk about why we're seeing so much red today. What has had the market dropping to start out the month like this? And then are there any safe areas where you won't see so much hurt today?
Yeah, well, I would say first off, when you see this much red, it's typically not fundamental changes in the market, right? It's typically not a rotation into, there's been a tech bubble and now everyone is selling, all their tech stocks and things like that. It's usually more of a liquidity yank across the board. And so I would say that that's really what we're seeing right now is just a liquidity dump, profit taking over before the long weekend. And you're seeing most of the sectors move together in that way. And for me, that's actually a better sign. So I would rather see the entire market, most of the sectors move down together and just say, hey, the market's taking a breather, rather than a fundamental crack in the market where, tech and big leaders are down 6, 7, 8%, while, the rest of the market is doing just fine, because that's usually more of a red flag that things are ugly. I'll let Graham kind of give his 2 cents, and then I'll answer more of the kind of the quote unquote safe sector part of the question as well.
Yeah, and on that note, like Nate said, there's no clear rotation happening today. If you look at the 11 sectors, every single sector is red today. So while there are some that are better, which we'll talk about here in a moment, they are all down. So there's no clear rotation into any sector. As far as the pullback we're experiencing now, I think it's just been overdue. We knew seasonally it should come, but we never take seasonals blindly and run with it. It's like, trading with the rear view mirrors, which can get you so far, but eventually you got to see what's coming ahead. When we look at the momentum, the internals in the S&P 500, that chart that says September is here will show you down on the lower portion of the chart is my custom built momentum indicator. And we've just seen a divergence really since end of June until now, where the momentum has been slowing a bit in the S&P 500. Meanwhile, the market's been going on to make all-time highs. So what that just tells us is that we should probably see a flip at some point where we get negative momentum, or when the markets are moving below their average pace. So you can see there in the chart, the S&P is kind of arcing upwards, where we're getting those diminishing returns, where eventually we'll probably flip back. And then from there, we can gear up for the next leg higher. Additionally speaking, if you look at the options market with the put to call ratio, last week we saw that the put to call ratio dropped to 0.75, which is kind of my key number. 0.75 and lower would be a time for me to start taking profits, or at least just being cautious with new positions. We did get that on Thursday last week. And if we look at how this trend line has been on the CPC over the last few instances, we can see the last time we had a downtrending CPC was going into the beginning of the year. And then I highlighted that red bubble there of when it dropped below 0.75. Well, what happened over the next 30 days? Nothing too crazy. There was some chop, but overall the markets lost 1% over the next month there. So again, it's just a telltale sign for us to maybe start taking some profits. The next time that happened was here in the middle of May. And what's crazy here, if you remember April, May, June, July, it was an amazing time to be long stocks. It was a historic buying opportunity. But funny enough, if you look at when the CPC dropped below 7.5, from that day, about May 18th through the next 30 days, the market's actually gained 0%. So while we all remember that period being red hot, well, that was a telltale sign that the near-term top was in. And so we just had that again on Thursday, and you can see as well the overall trend line is heading downwards. So again, it just shows me something similar is about to happen. It doesn't necessarily mean we're going to get a massive 10% correction. For me, I would love to see 5% correction here in September, and overall setting up a great buying opportunity going into Q4.
Yeah, let's go back to talking about the sectors. Are there some sectors that might not see quite as much of a pullback this month?
Yeah, I mean, to me, I wouldn't necessarily call any sector safe. That's a word that I'm not too comfortable saying when the market is at near the highs and potentially pulling back. But I do think the sectors that were underexposed during the run up, specifically healthcare, is probably one that's going to see a lot less selling pressure. We saw a lot of those, like Graham put a position on NVO recently in our live show, which was kind of a counter trend position. And he was sharing today, like a lot of our more speculative positions are down, but NVO was up on the day because it's one of those that's not going to have all that selling pressure because it's already underperformed. So I would say for me, 3 areas that make sense. If you're really concerned about downside, which full transparency, I'm not really all that concerned about downside. Like Graham said, 4 or 5%, totally fine by me. But if you are especially concerned about downside, I think healthcare is the most speculative one. In other words, it's beaten down, so it has some potential even in a rocky market. I think staples would be the more conservative one, where typically in a market condition that's selling pressure, a lot of the speculative stocks selling off, your Walmarts and Costco's are going to do a lot better. And then gold. Gold's the one that probably is the most defensive, and we are still in a rate cut cycle where gold typically performs extremely well. So I would say those are the 3 that I would look at.
Yeah, and going on that point, healthcare is actually, if we look at September as a whole and look at the seasonality of each sector, healthcare is seasonally the very best sector to be in for September as well.
Yeah, that makes a lot of sense for the healthcare field for sure. You mentioned gold. That's where we're headed next. These guys, by the way, if you're joining us, you're used to our MarketBeat Mondays. These guys are really specialists in trading. They are both live every day, talking about some of the biggest trades that you can do each and every day, and they're tracking those live. You guys are live twice a day, is that right? Talk about the times that you're normally live.
Yeah, so we're live. We have what we call the Opening Playbook. That's 10 a.m. We're live for about an hour each morning there, doing training, live trading, watch list, all that sort of stuff. And then we're live again, actually, with our closing playbooks. We have our opening playbook at 10, our closing playbook at 3:30, and that's a little, kind of faster moving, quick hitting live trading session where we're typically putting on more trades in that last half hour of the market.
Yeah, and your guys going to give us a little preview right now of talking about the trades that you normally talk about. And that's what we want to do in these Top Trade Tuesdays, is talking about some of the biggest trades you're watching this week that will really be relevant for all week. But I think if you want the most up-to-date data on real time, you want to follow these guys every day. Again, you can look at that link in the comments or in the description after this too. But let's get right into one of the biggest trades right now, and that we just previewed a little bit. That's talking about gold. Gold reaching new all-time highs. So what does this mean for looking at trades here, guys?
Yeah, we actually did this this morning in the opening playbook. So if you were there, awesome. We're up about 20% already this morning on the position. So I've given you guys here Another taste of that trade that you can take right now. Seasonally, again, just to harp on it, seasonally, gold is very, very bullish in September, typically for us. Also, if we look at the price action chart of gold, gold is breaking out. So it's been in this triangular pattern for a while now. We've been chopping around since April after that crazy run up last time around. And it's just broken out of that triangle pattern to the upside. Now, this chart that you'll see here was taken last week. So it shows gold at about 34.50. Gold right now is above 35.50. So it's a whole lot higher than what you see here on this chart right now for this breakout. From that same momentum indicator that we use for the S&P 500, if we look at gold, it's been exponentially increasing. So while the S&P has been losing momentum over the near term, gold has been increasing in momentum secretly behind the scenes. So this morning in the opening playbook, we went ahead and took an options trade on gold. Now, if you're newer to options, don't worry about this. We cover full trainings every morning in the opening playbook where we walk through it nice and slow for you guys to get started. However, what we did here, we did it what we call a wrap order. It's just an at the money debit spread. Again, if you've heard of options before, you've probably heard of buying calls and buying puts. What we're doing here is we're just pairing two calls together, which really increases our risk to reward. Now, we don't have time to get into all of the nitty gritty of how the debit spreads work and how, why Nate and I believe they're so much better. But I'm hoping here we can give you a little sneak peek of what we're doing. So essentially with this trade that we're doing on gold here, we are targeting a 100% return on investment. So you risk $100 to turn it into 200 or whatever you may want to risk, a double on our investment on a very, very small move in the price of gold over the month of September. Now, special note here, it could go up 1, 2, 3, 4, 5%, but we need a very small move or better for us to double our money. So here is the options selected right now. And I've unfortunately had to adjust this higher since this morning as gold has been running on us all day. But if you want to jump in right now, here are the options to look at. We're buying the 26th of September expiration, 324 call, and then simultaneously selling the 26th of September 325 call. And I'll walk you through what this means in just a moment. But we want to look to enter for around a net debit of 50 cents per contract. So if you're new to options, that's $50 per trade taken. Now, if we go to the next chart here, you'll see that this is how these options work. This is sort of how we rig them up. And again, if you're newer to options, don't worry. We cover all of this in detail on the opening playbook. But essentially what we're doing here is we're just making a bet that I would bet that gold is going to go higher in September. Now, it could go 10% higher. It could go 5% higher. It could go 0.5% higher. Doesn't matter to me. If it goes higher in September, I double my money on the trade. That's how these options work. Now, you can't get this with normal call options. It's a little bit more nuanced, and you need a much bigger move out of gold to see a double on your investment. But with the way we're using what we call the wrap order, we need a very, very small move in gold. And again, it could go to the moon. That's great. But we just need a very small move to turn 100% profit. So if we walk through some scenarios here on how this trade works, well, obviously, this is a bullish trade on gold. We all believe that gold is going to go higher. So if gold goes down, we lose. That's what happens. When you're trading, you got to pick your direction in this instance. So we need it to go higher. So if it goes down, you lose. If gold goes flat over the month, as actually right now where gold is currently, you would actually make a small profit. But we'll just call it break even for simplicity's sake. So if gold goes nowhere fast all month long, you break even, no harm, no foul there. Now, here's where it gets really cool. If gold gains 0.33%, 0.3%, so not 1%, not 0.5%, if it gains 0.3% or more, you actually double your investment. You make a 100% return on investment. And then from there, if gold gains 1%, you also double your money. If gold gains 2% plus, you also double your money. So again, this is a bet just saying that GLD, which is the gold ETF, will be above 325 by the end of the month. It's at 324.66 right now. So it needs to gain about 30 cents from here for us to double our money. And again, you can see the options to trade here if you want to follow along. Buying the 26th of September expiration, 324 call, selling the 26th of September expiration 325 call, doing it on one ticket for a net debit of 50 cents. And again, this is just a simple trade, just saying, hey, gold will at the very least, I think, drift higher this month. If I'm right, I double my stake.
Oh, Graham, it's a really good specifics. I love all of the specifics there. Some of the follow-up questions, again, some of our viewers are really new to trading. So one of the questions is just how? Is this going to a gold ETF? Like, what is this exact, how does this actually work to get this started?
Yeah, so GLD is a gold ETF, tracks the price of gold. It does a really, really good job of it, has a low expense ratio. So of course, if you want to just get exposure to gold, you can just buy GLD shares in any regular brokerage account. With the options, we are just buying an option and selling an option at the same time with a time frame. So the thing about options is you're making a bet for the future of what you think may happen, and that's why we have the expiration dates. So on that screenshot there, we saw that blue vertical line. That's kind of that is our expiration date. So we need that move to happen by that date for it to work out. But it's just a way to leverage the return. So again, if you buy GLD shares, you can have a great return. It could be awesome. But let's say gold only gains 1% this month. That's great. No one's going to complain. But with the way we're trading options, if gold gains 1%, we earn 100%. So it's literally in that instance 100 times the leverage by using the correct options.
And the thing that Graham and I will always push, and the reason we're so passionate, it sounds silly to be passionate about debit spreads, but we really are, because it is such a big scenario difference where if you bought the calls and gold goes up 1% and you hold those calls all month, you got the direction right, and yet you still lose money. And that's one of the big things that we talk about. You know, so many people trade stocks and then they finally get interested in trading options. And then what usually happens is they kind of take it on the chin, trading options, because they don't understand how options are typically stacked against you. Like Graham and I will always say, listen, you know, in 2023, it's not like every trader is just dumb. It's not like everyone just didn't realize NVIDIA was going up all year, right? They did, and yet they got burned on options over and over and over again because they probably didn't understand how perfect their timing had to be, how much they had to overcome what's called the implied move. What that means, and it's probably one of the most important things you'll ever learn if you trade options, is that if you go to NVIDIA and you buy a $200 call, you probably think that you're trading for NVIDIA to go up to $200. In reality, if NVIDIA does do exactly what you expected and go from $195 to $200, you actually still lose money. And that's why traders over and over and over again have such a hard time trading regular options. And it's, by the way, why Wall Street loves selling you those options over and over again, because they make money on them. All we're trying to do is say, listen, if you just understand how to flip those scenarios on their head, you're probably going to have a lot more success.
Yeah, and just to that point, and again, we don't have time here to get into all the specifics of it. We do that all on the opening playbook, and hopefully you guys are able to attend. But if you were to buy that same expiration date at the money call option right now, you need gold to gain 2% to break even. So if it gains 2% and you're right, and you're going, woohoo, I'm awesome, you made no money, which is crazy to me. With this spread, right now where gold is priced, we need it to gain 0.1% or more to double our money.
So you need 20 times the move to break even as you do to make 100%, which is just, and by the way, that's pretty common. And again, most people just don't realize it because they've been told, oh, that's trading that way is super risky or super complicated, kind of all these mainstream ideas. And our goal is to show you, by the way, not only does it not have to be that complicated. Sure, you got to do some training, you got to spend some time, you know, doing a little bit of work. But actually, once you understand how to trade this way, you can do it with a lot less risk. And that's kind of one of the unsung heroes of really understanding options at just a little bit deeper level, is that you can actually manage your risk a whole lot better, which is something that I just don't think you hear from mainstream.
Yeah, I think it's a good way to look at it, is looking at the spread that you're talking about. I hope this is making sense to our viewers. Again, for some of you, this might be new. For some of you, this might be simplistic, older news. Either way, I'm glad that you're here joining us and learning a little bit more about some of these top trades. Again, if you want to learn more from these guys, we are going to continue to do this every Tuesday. We have a few more stocks to cover yet this week. Let us know, or yet today before we close. We've still got another 10 or 15 minutes, so let us know if there's a few different stocks that you want to hear about. I know we have a couple more specific names to share with you, but I wanted you guys to talk a little bit about the other program that you guys have. So not only do you go live twice a day, you guys also send out your top trades of the day. What is that program about?
Yeah, just a free gift from us to be part of our community. We call it the New Money Crew. It's me, Graham, and one of our other traders, Lance, who's a really sharp guy, and he specializes in option flow. So he specializes in those sneaky orders where someone, on Wall Street or maybe someone works for the government or whatever it might be, buys $1 million worth of options on a stock, and that doesn't usually make it across your typical volume analysis and things like that. So between the three of us, we put together some of our strategies, and we did this scan called the New Money Crew scan. Basically, what that does is it combines some of Graham's techniques, some of my techniques, and some of Lance's techniques. And instead of selling it for a few $1,000s like we typically would for an indicator, we thought, why don't we just give people this as a way to get started and kind of get a good watch list going? So we actually give that out for free every day. And then we text an additional pick directly to your phone every day, just as a free gift from us as part of our community. I think that's right there. If you put your email and phone number on that QR or that link, you'll start getting it each day. So that's just kind of an easy way. Maybe you're not ready to spend 2 hours a day with Graham and I, but you just want to kind of start building your watch list. You can get those each day.
Yeah, I think another good transition question here is a great question from Satisfying Cuts. Thanks for joining us and asking the questions in the chat. We love to hear it. But one of the questions is, how much of your investment should you be actually doing in trading? I think you guys talked about this during our last live, but it's good information today. There's investments and then there's trading. What's a good percentage breakup for how much of your overall budget you should be putting into that?
Yeah, so this actually goes kind of to what I was saying about risk. So I only have a relatively small active trading account. I only have about 40 grand in my active trading account. So I'm not putting a huge amount of cash in there to actually trade with. And the reason is because I don't need it. Because the way that I trade, specifically with debit spreads and things like that, I can get really aggressive with $500 or $1,000 in a trade. And so I don't need all of my capital sitting in there waiting to be used for a trade. I actually want that invested in the market. And so what a lot of people, I personally think, get wrong is they'll put $500,000 in a trading account and they'll use like a 1% rule or a 2% rule. To me, that doesn't really make any sense because I can invest that and then just use a much more aggressive portion of that capital to trade. So I know everyone has their own approach. I actually just did a class recently on a couple different approaches, how you might want to do it. For me, trading account that I'm very aggressive with, an investment account that holds most of my money. And I think that just makes most sense because I don't want my cash sitting there not being used.
Yeah, I'm the same way.
Yeah, I think these basics are good. It's a good advice and a good way to get started to know how to do this safely and how to get started safely. So thank you for covering that. Let's get into a few more specific names. I know we've got a few from the chat here that they want to talk about. One is GitLab. This made our stock picks of the month from one of our regular analysts. GitLab was his number 3 pick to be watching in September, but we know earnings are this week. So we want to look at that one a little bit later on here too. And then we had another question about SoFi to look at those two and if there's any trades to look at in those two stocks, especially GitLab with earnings reporting yet this week. I don't know if you want some time to look those up first, and maybe we can talk about Merck and Company first.
Yeah, sure. Let me cover Merck because this is one that is in that healthcare sector that I mentioned. I think is a little more defensive right now. And so the way that I actually would recommend trading Merck, also debit spread, so same idea here, where you would put two calls together. But I would do this actually below the current price. And again, this is probably going to be advanced for most people who are newer to options. But if you have time to come to any of our sessions or watch any of our recorded trainings, this is what we would call a defensive trade. And the way this one works, Bridget, is you put the options on below the current price of Merck. So Merck is trading at $85 right now, or right around there. And instead of doing what Graham did, where you would buy, options right around that price, I would actually buy the call and sell the call a couple dollars below this $85 price. So you could buy the $82 call and sell the $83 call, for example. Again, I keep saying this, but if that sounds like a lot to you, and like, wait, what do you mean buy and sell the call? Don't worry, lots of training around that. For most of our members, it was very new to them for a while, and now they're pretty much pros at trading this way. But the cool thing about that is that actually what you're doing is you're giving yourself a cushion. So when I said I like healthcare, but I don't necessarily think it's going to explode if we get more selling pressure. I just think it'll hold up better. Well, what that means is that even if Merck goes down a couple of dollars, I'll actually still win the trade. Now, I'm not going to make 100% like Graham would on his more directional trade, but I might make 18% or 20% or a 22% return as long as MRK stays above $83. So it can actually come down 2.5%, 3% per share over the next couple of weeks. And if that happens, I still win. So anything better than a negative 3% return on Merck, I'm going to make money on the trade. So that's how I would trade that one, or any of the other healthcare stocks that I like right now. I would trade them where I'm putting myself in a position where, as long as the stock doesn't come down too much, I still win. We call that a cushion or a defensive trade, and they're a great one to learn, where you want to be, in the market, you want to be actively trading, but you don't want to be aggressive and need the market to move in your favor, 1 or 2% in order to make money.
Very good. I like that one. Let's go to some of the ones that our viewers are wanting to hear about quick before we get to your bonus pick, Graham. And I know that's an interesting one too. So we're going to cover that one last. Let's get to SoFi. I've got that chart pulled up here. First off, this is one that we talk about a lot as just a long-term investment. I'd love to hear both of your thoughts on whether this is a good long-term play or if it's a good one for traders too. Kind of both perspectives on this one.
I think the
could be a rocket mortgage play hand in hand there.
Yeah. The chart of SoFi looks really great right now. Financials have been strong. The sector's been gaining steam even last week, while a lot of sectors were kind of falling off, or a little bit of rockiness. And I like to buy the dip on any of these stocks that have really, really great trends, great momentum. SoFi's momentum is green, which tells me it's trading at above average pace. So it looks really good there. Now, all that being said, if we do get this multi-day sell-off, I would not be shocked to see SoFi sell off a bit more from here, but it does look really good. It looks like a stock that you want to be buying anytime it's at a discount right now. And like Nate said, it's very similar to RKT, which is a trade that I put on Rocket Mortgage, with, again, the theory being that if we do get interest rate cuts coming up, the housing market has been the worst housing market right now since 2008, which is crazy to even compare it to that. But if we do get interest rates going down and declining and mortgage rates follow along, which hopefully they do, we'll see a lot of refinances, hopefully new home sales pick back up, and that's really good for companies like SoFi and Rocket.
Yeah, interesting look at another sector. I like to see that. Let's get on to GitLab. Is this something either of you have covered before too? I think earnings is potentially Wednesday this week, but I might be wrong on that date.
Yeah, the earnings are Wednesday after the bell. For me personally, this is something that we do more in real time on the closing playbook. So we have our 3:30 p.m. session to look at names like these day of earnings. So for me right now, anything going into earnings would be speculative, and then buying anything hoping to hold the earnings right now would be pretty speculative. We really like to gather as much data as we can right before making that trade. So that's my personal take on GitLab. Now it could pop. I hope you guys were able to take advantage of IREN last week, IREN, which we did here on this show. That one's up almost 30% since last week. So GitLab could be another one like that. However, it's going to take a little bit more analysis. Let's give it some more time here before the earnings date to get a real good idea on where the options traders are betting.
Yeah, I think that's a good thing to talk about. Is this something you think you'll cover on your morning show tomorrow? Potentially?
I would likely say that we will definitely cover it tomorrow afternoon.
Normally on those earnings days, we'll do it on the 3:30 session, because then we'll basically put a trade on right before the earnings announcement actually hits around 4 p.m. So that 3:30 session is kind of our more active, we'll trade earnings and other things that aren't necessarily like high conviction long-term analysis. They're more just like, hey, let's look at a chart, look at a trade, get some of the option flow, and then put on a live trade, during that 3:30 to 4 p.m. session. So that's typically when we do our earnings plays. And we'll have to remember to put GitLab on our short list there for Wednesday.
And we have a lot of good names tomorrow. I know Salesforce is up as well, and C3 AI. So again, we could do it in the morning, but here's the issue with doing it in the morning is there's still a full day of trading before the earnings event. So we want to gather all of the orders, look at every single big order place, and then make our decisions based on that, which is why we just wait towards the end of the day.
Yeah, I think it's important to point out we're talking about some trades to watch this week, but when you are trading like these guys are every day, it's important to look at it every day. You really have to be looking at what's current that moment in order to be successful. At trying to make a plan today for what might happen tomorrow kind of sounds like dangerous territory, right?
Mm-hmm.
Yes.
Yeah, I would say so.
So let's talk about that last bonus stock you have. This is more of a seasonal pick. We can talk about it in advance a little bit better. And this will be our last one for the day. Let's talk about that bonus pick that you have, Graham.
Yeah, so this one is INSM. That is the ticker. This is not one that I trade very often, but it did come up on our dashboard as one that goes up every year for the last 10 years from September 2nd through September 20th. So again, we talked about how a lot of stocks are kind of off the table for September. We're not super bullish. We're actually mildly bearish. So a lot of folks think that's time to hit the sideline, be out of the markets, and it can be. But if you're looking for opportunities to the upside, INSM is the one I'm looking at right now. It averages a 6% move on the stock over the next 18 days. It's up 5% today as well. A really beautiful chart here too. So this is just another one to have in your back pocket during the typical rocky September period. This one typically shines. INSM is the ticker.
Very good. Love the bonus pick there, guys. Thank you again for your time today and really helping to introduce our MarketBeat viewers to some trading info and breaking it down for us step by step. It's really helpful. Again, if you want to learn more from these guys, you can join them on their show again this afternoon. I'm putting up the QR code one more time just so that you can scan it and enter your email address in there, and then you can get right to their show and go follow them every day for the step-by-step trades. I think that's what's so helpful for people just starting out, especially if you're just new to trading. They're going to cover it step by step and really break it down. So you can scan the QR code and get to their show every day. Guys, thanks again for your time here on MarketBeat. We're going to see you again next week, Tuesday, for another look at some of the big market moves happening next week. Again, we'll see you again next week, and thanks for your time.
Thanks
everyone.
Yes. And thank you for joining us and for joining in the chat too. I love the questions today. It's interesting to get this other view on the market a little bit too. We're going to have another new video for you tomorrow. So join us back on the channel tomorrow at Market Close for another new video on another exciting topic. As always, thanks for joining and happy investing.